I like to see 2 consecutive candles closing above or below. Right? So 2 closings will prompt me to have a signal. And so the reason why this gave a short signal, 1127, is because 2 consecutive candles closed below the Atlas line and the market went down just a little bit. Typically, when this occurs, it's a strong move when we have a double bar long or double bar short. Just like if we see it overnight. Let's go to overnight. Here's an Atlas line overnight. And this is the reason why we are going long here at 1142 quarter is because 2 consecutive candles closed above the Atlas line and it provided us a signal. The market went up a little bit. Now the reason why we have this short signal here at 1140 quarter is because 2 consecutive candles closed below the Atlas line. And so the closing price of the second candle, or the closing price of this one or this one right here, is the entry price. All right. So the entry price correlates to price proving to where it wants to go. So the closing price dictates our entries as well as proof, either up or down. And so this is important because I see here an opportunity to take this short multiple times overnight, right? And if you would have began to start looking at a long trade here, you'd be wrong because the market just kept on going down and down and down. The same thing with here. This is yesterday, August 22nd. I think I did a video on this, a live trading video. And so you see here that this is 1, 2 consecutive closings below the Atlas line. And maybe I'll even pull up my dome. We'll take a couple of trades. And so this here is telling me that I should in fact go short. 2 consecutive trades, 2 consecutive closings dictates where price is going. It's below the Atlas line, and it never looked back. It kept on going. All right. Pullbacks are very important to me, as well as strength trades, and this is all explained to you during a one-on-one webinar that I do with everyone who purchases the Atlas line. It's important for you to understand how the Atlas line works, markets that you trade, how to configure overnight times as well as the day session times. Here's the day prior. This is August 22nd. This is August 22nd, right? This is the overnight. So overnight, when the London exchange, the Life exchange opens here, market took off, right? Pullbacks, take them all the way up. No opportunity to go short because it never went below the Atlas line. Okay? And so now, this is where we are right now. Here, if we have this candle is candle number 1, and then this candle is candle number 2, if it stays where it is and closes above the Atlas line, which looks like it may, unless it just reverses, we're going to get an order to go long. Okay. Dan, the Atlas line cuts off because it's only works for 8 hours for a session, and then it restarts and replots based on pit session, overnight session. You can have it at noon, right, Dan? So the Atlas line is only plots for 8 hours, a trading day, and then a new Atlas line begins on a new session, right, Dan? So I started this this webinar explaining to you that I like to keep these webinars as informal as possible. If you have questions, if you have any markets you want to look at, I'll be happy to pull them up. And I'm going to go over how to set this up overnight. I'm going to show you something called the ABC pattern today, which is something that I look for every day. And so as soon as we have about 2 minutes left here, less than 2 minutes, when 2 minutes is over, we're going to get long orders. And so it's going to be long trades, both in the DAX, on the Euro on the E-mini. All right. So I'll pull up some markets that you want to look at. Here is the Euro. Euro is a big market to trade here. And so the reason why we're having this double bar long right over here at 43.84 is very simply because we had 1, 2 consecutive closings above the Atlas line. That's the reason. All right. And then as soon as this candle closes, it'll be another long signal. All right. Let me show you what the back end of the Atlas line looks like so you can have an understanding how this works. Joey says here on the ES, would the two red candles, let's take a look at the ES, Joey, would the two red candles prior to the crossover, these right here, okay, so there's the signal, right there, 1136 to go long. Okay, hold on, Joey, just a second.
Order pending.
Okay, and so let's see what happens.
Order
here.
filled.
And so I'm going long here at 1136 because two consecutive candles closed above the Atlas line. Just bring that back up here. Okay. And so I have a reason to go long. I have a stop, right? My stop is placed down here, and I have a profit target. Profit target I like to keep at about what the ATR is. ATR is about 6 points. And so I have a 5-point profit target, and I think I should put the stop loss just a little bit more because of the volatility. This is pretty volatile. Any questions, guys? All right, anybody have any questions? So I do give this a time-based stop, and I do give this a hard stop, what I call a catastrophic stop, and a prove it stop. So this is where I'm at right here. Manuel, the Atlas line works on TradeStation, Ninja Trader, eSignal. Okay. Bob Cunha, how are you, Bob? Bob, I don't usually hold trades longer than 20 minutes or 4 to 5 bars maximum. Time-based stop, right? It was Damanosco, Damancos. 1127 here was not an entry because we had a news event at 10 o'clock. I don't trade news events, and I don't recommend anyone trading news events. All right. So there was a, here I'll show you. There was a news event that came out on the Bloomberg Economic Calendar, and that's the reason, okay? All right. Nice. Ironbound's a good place. Have some Prestige Nata for me, will you, Bob? just close this up here a little bit. All right. So that's working right there. Okay, put this right here. Michelle has a question here. Does the Alice line let you know about a news event? No, you have to look at the Bloomberg economic calendar right there. See? It says right there, 10 o'clock, new home sales. You have to look this up, right? You got to look this up, right? New home sales. Okay. All right, Michelle? Bloomberg economic calendar, honey. All right? Michelle. Okay. All right, very good, guys. Now, the market is pretty volatile, and how I know that is because I look at the average true range, the ATR, and I see that it has 5.36. So this is volatile. Usually the E-mini S&P is between 2 and 3 points is normal, right? But when it goes above 5, it's volatile. So just want to warn you guys, it's a volatile market, right? Most traders make the problem that they trade the same conditions under a volatile market and under the same. Under, when it's volatile, when it's slow, you can't do that. You have to understand it's either slow and it's fast, and you have to trade accordingly. Look at the ATR, the average true range. It will by far keep you out of trouble. All right. Hello, Jaikishin. All right, guys. All right. So back to what I'm showing you guys here. Very simply, I want to be long when price is above the Atlas line. I want to be short when price is below the Atlas line. That's it. All right. There are orders. Let me show you the back end here of the Atlas line. These are the orders that it provides. We have here a market open of 9:30. I live in Florida, Eastern Standard Time Zone. So this is when the market opens for me. Okay. We have here a trade bounces, trade crosses, and trade double closes. Okay. And this here is how the Atlas line, you can turn them on or turn them off. The signals accordingly. All right. So you can do whatever you want here, turn them on or off. My favorite are the trade double closes. Those are my favorite. Okay. Because it shows me the direction. Then followed by the trade bounces. All right. There is no, this is a 3 o'clock Atlas line. 3 o'clock in the morning. There is no specific parameter attached to the Atlas line, and that's a good thing because we don't have to think about a stochastic, a moving average. So it just works off of the market that you're trading on. All right. All right, so let's take a look at it. I'll let this do its course here. Let's take a look at a few other markets here. This is the euro here. All right. This is the euro overnight right here. To go long, the euro overnight. Here is the euro yesterday, right? This double long order here did not work out, and then short. This is yesterday on 8/22, yesterday on the euro. This is euro overnight long, euro overnight short, and here is the euro from Friday. Okay. Okay. All right. So now, let me show you, while this trade works out, I'm going to show you something and teach you something new. I'm just going to go here into the future. And let's do this on the DAX. I'll do it on the DAX. It's fine. I'm going to show you something called the ABC. Okay? And the ABC works like this. Let me go to the mini. Might be a little bit easier to show you. So this is the ABC method I'm going to show you, and I'm going to remove the Atlas line here. Okay, so go here into the future. Actually, let's go to yesterday. I think it makes more sense. Starting off at 9:30, I am going to call that, I'm not sure if I'm going to be able to do it. Let me see here. Yeah. Starting at 9:30, I am going to place a vertical line on my chart. And then at 12 o'clock, I am going to place another vertical line on my chart. Okay, like that. All right. And what I like to call this is the A part of the day. Okay, I'm going to make this the A part of the day right here. And so, what can I expect out of the A part of the day? Well, I can expect a move. I can expect a good trade. This is the best part of the day to trade. Okay? So if you're thinking about the A part of the A part of the day is the best part of the day to trade. This is what I expect. Why? Because the volatility, the range, everybody's trading. This is the best part of the day to trade. All right? And so when the A part of the day occurred, it's the first 2.5 hours. It's 2.5 hours. The first 2.5 hours of trading, I want to be in and out of the market. This is my goal. Now, when you come into the B part of the day, this is the B part of the day. The B part of the day is a typical, right? B part of the day is typical for range bound or whipsaw. This is what I prefer. Okay. And so in the B part of the day, right, the B part of the day, we have another event that occurs. Now, if I would say to you, in the B part of the day, I say to you, expect to have whipbound, whiplash, or whipsaw, I should say, back and forth, back and forth. This is what I expect to have happen. I don't expect anything more than just whipsaw, back and forth. But if B does anything other, right, than whipsaw, and it continues to go down and down, then it's doing something different. It's doing something other than. And this is important because when you look at taking a trade, you want to make sure that it is, for a trend, breaking the lows of A or the highs of A. And so what you can expect in the A part of the day is a nice move up or down, but in B, I want you guys always to expect whipsaw, just back and forth, okay? And so B lasts for another 2.5 hours. Now remember, if B does anything else, then you know that we have a trend. We're in a trend. So I want you to look at this as soon as it starts to break the lows here of what occurred in A, you know that this is going to be a trending day. Okay? So let me show you an example of that. Okay? Go back to here, 9:30 to 12. 9:30 to 12. Here is a move in the A part of the day, right? And so what happened in the B part of the day here? What happened in B? Nothing, right? B never broke above the low or high of A. This is something I teach in the coaching program, the mentorship program that I have. It's a new class is starting on Monday, Those of you interested, please sign up. I think it's going to be a very nice, we have a nice group already that joined up. And so Monday starts a new coaching. And the Atlas line is included with the mentorship program. So the Atlas line for 2 computers is included. All right. So here is B from 12 to 2:30. So again, what do I expect in the B part of the day? I expect price to stay confined within A. And that's exactly what it did. B did not do anything. It stayed stuck. Now, it's only when we can catch a trend early on, when we have a closing, or I should say 2 consecutive closings above or below the range of A. Okay? That is when I can count on something happening. I can count on a continuation and the market's going to close much higher or much lower. Let me show you another example of that. I'm just going day by day. Okay? Here. All right. We have here 9:30 to 12 o'clock. Right? And so we have the low of A here. This is the A part of the day. First part of the day, first 2.5 hours. A. Okay. And I'm looking for it to close above or below to prove to me that we have a trend. So do we have a trend here? Anybody want to tell me if as soon as A closed, did price move out of this confinement, or did it get stuck within the range of B? What do you guys think? Right. And so now this is very important, because we can look back on a day and we can say, wow, that day was a trending day. But how do you catch that early on, or early enough to be, how do you catch that early enough? You can look back and say, wow, I should have bought, I should have sold. Here is the proof. Since I'm a price action trader, here is the proof. Price needs to close consecutively above or below the range of A. And specifically, I need to have this happen. I need to have this happen as early as possible. If it happens towards the end of this quadrant, or the end or by 2:30, it's too late. I want to see it go, and push, continue higher within the first hour, maybe by 1 o'clock, 1:30 maximum. That will prove to me that we have a trend in place. Okay? Let me take a look at the prior day here. All right. 9:30, 12 o'clock. Oops. There, 9:30, 12 o'clock. Okay. And so here is the range of A and the range of A here. Did we have 2 consecutive candles here? What do you think? Did we have 2 consecutive closings above the range of A? Anyone want to answer that? What do you think? Michelle? Denny? No, just 1. Not enough proof. Not enough proof. I need to have more proof than just 1 because of a false breakout. Now, I'd like to see it happen early on. It attempted, no cigar, there's no trade. Let the price prove to you what it wants to do. Here, it gave us 2 consecutive candles. As soon as it closes back up, if you held this, you're out of the trade. Prove it stop, as I like to call it. Prove it stop. So if you go short and then it closes back up, it doesn't continue. The first closing that closes back within this range, you're out of the trade. Okay, guys? This is the ABC pattern. So this is A, and this would be B. All right? All right, now, let's go back another day. I'm just going back day by day. I'm not picking and choosing days. I want to show you consistently what's been happening in the markets. And the same thing, we have here 9:30, and 12 o'clock. We have no real proof of a trend. Look at that. Did we have an opportunity to go long based on the ABC method here? What do you guys think? Or short, I should say? Long or short? Nope. So when it does something other, because this happens 85% of the time, I can count on this. The B part of the day whipsawing and being stuck within the range of A. This is what I count on. But when it does something other than that, that's when we have a trend, and that's when you can catch it early on. Okay? Questions, guys? All right. Let's take a look at what's happening here with this trade. All right, so I went long here, 2 consecutive candles. This would be considered a pullback trade right here, but I was already in a trade, so I can't take it. 1, 2, 3. I'm on the 4th bar. If this 4th bar doesn't give me my 1141 profit target, I'm out of the trade. All right, this is where I am right now. And so it's important to have and to be versatile with a time-based stop, a prove-it stop, as well as a catastrophic stop. Anybody have any questions on that? Okay. Question here from Damanakos is, how do you know your stop? Take a look at this over here. It's called the ATR, the average true range. Let me pull up the E-mini here, right there. Okay. The average true range, the ATR right here, is telling me that the market, the most recent market conditions are 4 points. When I took this trade, it was closer to 6. So your stop is based on, actually let me just lower this down to a point, 1139, actually 1130, 1140, because now it's at 4 points. So I take the most recent market activity, if it's been slow, it's been fast, to dictate my stop or my profit target. Okay? Damanakos. I know that I'm not saying your name correctly. Do you ever trade in the range, Denny? Denny, you want to clarify that just a little bit about trading in a range? 5-minute Damanakos, 5-minute timestamp. Okay. Oh, the time period I use is a 4. For the most recent market activity, 20 minutes, 20-25 minutes. All right. So now, while this trade is we have about 3 minutes left on this trade. Time-based stop, I only hold it for 4 or 5 bars max. Absolutely, I'm out of the trade. Win, lose, or draw. It didn't work out to my profit target. You know, the worst thing that any trader can do is hold a trade longer than you should. That is the worst thing that you can do. And so the reason why I really trust a time-based stop is if it didn't hit my profit target within 20 minutes, 25 minutes, it's not going to happen. If it doesn't happen now, it's not going to happen in an hour, 2 hours. Now you're working on hope, and you're just holding it for way too long. All right, guys? You're welcome, Damanakos. So I don't hold a trade longer than 20, 25 minutes ever. Break-ins rather than breakouts. Sure, if you're looking at trading inside of a range. As far as the ABC pattern, Denny, you're looking at? Let's take a look at what this looks like here. For example, 930 here. Actually, it's the wrong chart. 1 second. This one here. I think it was this one here. Yes. So Denny's saying, why not trade within the range? Absolutely, you can. As soon as you realize, Denny, that this is not moving lower, you know that this is going to be whipsaw within the range of A. I want you to expect it, actually. I want you to expect it. This is what typically happens. All right? Absolutely. Let me see if I can get you an example when we have a trend where we can catch it early on. I'm not sure if I can. We had something recently where I could show you an example of that. Here we go. All right, so here's looks like a trend to me. 9:30 to 12 o'clock. And I want to see it close above the range of A. Right? Everybody agrees here? You're welcome, Daddy. Okay, and so what do you think? You think on August 11th, when there was a true range in place, that we had proof of that early on? There's my proof. Objective rules, that's how I work off of, and that's how I trade. All right? I absolutely want to base everything that I do on specifics. And so it doesn't seem like, I hope it is. No, it is. 2 consecutive candles are closing above the range of A, and that's the rule, and this is B, and that's the reason why I take it. All right? Now, going a step further, if you said to yourself, I am going to, see here is 14:30. I am going to take the same thing that I taught you, the same exact thing, and instead of putting it on the A part of the day here, I'm going to say to you, let's put it on B. Let's calculate the range of this B section of the day, the middle part of the day, right? And if we have a late day breakout, a late day rally, a late day sell-off, a news event usually occurs between 2 and 2:30, what do? 2 consecutive closings above or below. As soon as I like to see it early, nice and early, within the first couple of bars. Just same thing here. There's our trade. Okay. Questions? Denny, Michelle, Jay, Igor, Hassan, Harv, Dave, Dan, Chuck, Buddy, Bob, Morty, Nick, Ryan, Steve, Tony, Juan, Ted. Harinder, Haim, Gary, Fred, Francisco. Okay. What I want you to do is take what occurred in the range of A and say, if this market's going to trend, show me. If it's not, it's going to do what it does 85% of the time in whipsaw. The same thing with the C part of the day. This is the C part of the day. All right. And I go into much more detail in the mentorship program that's starting on Monday. I think some of you already signed up here. A couple of you I see in the room have signed up. I go into much more detail on how to trade price and price action. All right. And the Atlas line is included as well. Yes, it is. Janice, the Atlas line is included for 2 computers with the mentorship program. Yes. Bob, the mentorship program is 8 weeks, 3 hours a week, live. Everything is recorded, and everything is recorded. You get a login. Let's see what's going on here with this. Okay, here, 1, 2, 3, 4. 1, 2, 3, 4. I have to be out of this trade. Unfortunately, this did not amount to anything. It's too bad.
Stop filled.
Yep. So I had to get out of this trade, guys. There's a reason why I entered. 11. Where's my dome here? No, not the dome. I entered because 2 consecutive candles closed above the Atlas line. That's my reason. I bet you this thing is now going to take off. It always happens like that, right? I entered right there, and I held it for, I should only hold it for 4 to 5 bars max. 1, 2, 3, 4. 1, 2, 3, 4. Yeah, exit. Look at that thing, not taking off. So I had a reason to go long. Now, there is another long entry here. If we have 2 consecutive red bars, a pullback, just like we have here, it's another long entry. But more importantly, I want to say to you that you should not go short unless you have proof. Atlas line will give you proof. 2 consecutive closings below. Manuel says here, do you use a market order to get out? No, I typically move my stop and my profit and bracket to where it's trading. So wherever it's trading, I'll show you here. Let me just bring up my dome guy. Right there. Wherever it's trading, let's say I have my profit and my stop. If I'm ready to get, look at that thing get out. Now, come out now. Yeah. Right? So, long is really my only option above the Atlas line, right? Long is really my only option above the Atlas line. Emmanuel, bracket when you're ready to exit the trade, definitely you can just click close or exit at market. But I like to move my profit so I don't lose a lot on slippage. My profit to where it's currently trading, and then I pull up my stop to 1 tick below it. That's how I do it, Manuel. I pull my profit down to where it's trading, and I pull my stop to a tick below where it's trading, so I don't lose anything. All right, just to minimize slippage, Manuel. All right, but you can get out at close, and then it'll just get you out of market. Chris here has a question. Says here, how do you break during 9:30 or 12? How do you break out? I'll show you. It's only, Manuel, on trending days, which we don't have a lot of. Remember, the market only trends about 15% out of the entire year. So, for example, today, on the E-mini, and I want to say to you guys, what I'm showing you on the ABC pattern works on every single market. It's not just the E-mini. Every single market, the ABC pattern works, all right? So here's 9:30, here's 12 o'clock. Wherever, Manuel, I'm sorry, not Manuel, Chris, wherever, Chris, this specific range occurs, I say this is the high, this is the low, right? This is the high, this is the low. If in B, consider this A, the first 2.5 hours. In B, I want you to say to yourself, I want to trade long or short if there's a trend, but show me there's a trend. 2 consecutive closings above or 2 consecutive closings below. Okay? And so, as soon as it occurs, and I like to see it early on within the first hour of B, that's your ticket to say today is going to be an up day or a down day. And if it happens to close back down after you enter, you're out of the trade. If it closes back within the range of A, let's say you were wrong, you're out of the trade. It's called a prove it stop. All right, Chris? And then from 12 to 2:30, adjust for your time zone, right? This is considered the C part of the day. Do the same exact thing in C. Take the range of B, 2 consecutive above B or below B, late day rally, late day sell-off. All right, Chris? That's your entry. I have one video out on it actually with that, and I took a long trade this morning. Unfortunately, I didn't hold it because I have to stay true to my 4 to 5 bar rule. I don't want to hold the trade longer than I have to, so I get out with a small stop, small loss, pretty much where I got in, and then right on the next bar it took off. That's just the way trading is, guys. And then I look for another trade. Another trade consists of pullbacks, consists of strength trades. If we have 2 red bars, it's a pullback. but scalp the market long, take long trades. Everything I see here above the Atlas line, it's long until it proves me otherwise and closes below. All right. Any markets you guys want to take a look at? The ABC does not consider the Atlas line. No, Chris. It's pure price action trading. Just the price action. Chris. All right. The only software that I use, or the only quote-unquote indicator that I use, is the Atlas line. Everything else that I do at the open, trade scalper, price action scalping, it's all based on price. I don't do candlestick interpretation. I don't use Fibonacci's. I don't use channels. Euro, sure, Michelle. Here's the euro. Here. So here are the orders on the euro. This is a long, double bar long. Here is a double bar short, 1, 2, right? Here is a double bar long, 1, 2 to go long. Here's another long trade. It's more of a whipsaw, if anything, Michelle, that I see here. All right, Finley, ATO worked out today, and I see a pullback on the ES. Will the webinar be here for review? Sure. Yeah, that's the only thing, Finley. When the ATR is above 5, let me go back to the E-mini. When the ATR is above 5 here, over here, it becomes more of a high-risk trading. Obviously, the market's moving very fast. You can't have a tight stop on it. You're going to get knocked out. And so the ATR tells you that it's risky. Anything between 2, 3, 4 points, it's normal. Anything above 4, 5, pushing 6, it starts to become a little bit erratic. All right. Finley, ATO worked out. Let's take a look here. ATO entry was, let's take a look. Where did you enter? Right here on the ATO, Finley? 11:30. Yeah, cut down on contract size, absolutely. Just like we spoke about in the webinar. Absolutely, Finley. Good job. Very good job. All right. Good. Yeah, this is a rule of thumb. When the market is moving at a good clip, and I see the ATR is high, it's chaotic, you don't have to trade as much. Usually I trade anywhere between 10 and 20. Even less when the market is high volatility. When the market is trading at normal, you trade normally. When the market is slow, you can trade a little bit more because you're going for less. All right. So you did the right thing. Good. Anyone have any questions on the Atlas line? Euro is here. This is the crude oil. I haven't taken a look at this market. Let's take a look at what the crude oil is doing here. Okay, this crude oil was a short right here, 84.10. It did not do anything. This is a bounce short, right? Bounce short. Okay. This is going to be a long trade right there. As far as another short trade, I don't see it because we're trending higher. Price needs to close lower in order for it to give you another short trade. Here is a short right on the Atlas line. Here is a long. Here is a short. Here's another long. This is overnight. I don't know if I would trade overnight the crude. And so here's crude yesterday, 822. Short. Let's see what it did overnight. It's a long trade overnight on the crude. And here is short and long on the crude oil. Okay. All right. Alright, anybody have any questions on the ABC method that I've just shown you? 3070, right. 3075. Very good, Finley. Alright, look at this every day in whichever market you trade. It doesn't matter. It's price proving to you that we're in a trend, or if we're not in a trend, it's going to do what it does every single day. Okay, great. Getting some Skypes here from some traders. Very good. Alright, great. Alright, let's take a look at another ABC pattern. Alright, so I said to you that when we do the same thing for B as we do in A, right? For C. So if there's an opportunity in the last part of the day, let me show you where to grab it. And with proof, here's the range of B. 2 consecutive closings above or below. 1, 2. That's my short. And I would attempt to take profit on from here to here. This is 22.75, 19 quarter. It's about 3 points or so. I'm an in and out kind of trader. As soon as it closes back up, I'm out of the trade. Closing above into the range, that's your ticket to get out. Right. I would say even higher, Finley. I would say not even. Hold on, Chris, just a second. I would say even higher than 75%, 85%. It trades within the previous. B trades within A, 85 up to 85% even, is my opinion. And so it's only when it does something other, that's when our eyes light up and say, here's an opportunity. Chris, for gold, I would take the opening price of gold, opening time of gold. It opens earlier, if I'm not mistaken, then gold opens earlier than the E-mini. Right, Chris? So you have to take the same exact conclusion, okay, that I'm showing you the E-mini and relate it to gold or crude. $9:30, 12 o'clock. Here is. Okay. For me, I think this is a little bit. Oops, I'm wrong here. It's like this. Yeah, it's good. This is good. Good short right there. And you're out. You're out of the trade right there. You have to be out. And then you have it again. 1, 2. And this time, it worked. Okay. And then you take what happened in B. Here's 14:30 right here. And the last part of the day, C, stayed within the confinements of stayed within the confinements of B. So you know that there's no huge opportunity that exists. All right? Sure, Michelle. Absolutely. I have recorded this. Joey and Michelle. Okay. Let's take a look at the Joey. Let's take a look at the yeah, two candles. Where's it? Joey. On the if we're looking for a pullback trade at this point, where would price need to close above, giving us at least 2 red candles followed by a green? would we look at 1136 on the first pullback after the cross above the Atlas line? Okay, so we need two red candles, right? First, the plot. The first green candle that closes back up, that's my entry long. It has to be higher than my previous pullback. And so if my previous pullback was this guy right here, right there, then it has to be higher than 1133.75. 1133.75. Joey. Okay? But we have to first have two consecutive red bars, at minimum, showing us a pullback, and then the first green candle that reaffirms the trend up, that's your ticket. All right? You're welcome, Joe. It did move a lot. Finley. If it's overextended, as it is here, obviously that could have been the move. So I agree with you. When there's a news event or pops up like that, you have to be wary of it. So definitely. The closer you enter to the Atlas line, the better it is. And so I don't know if this would have made a difference, but let's go to a 3-minute chart. A 3-minute chart would have got you in a lot earlier. See that? And you still have the same rules apply. You have a pullback. Here's another pullback right there, right here. Right? Here's a pullback right here. Same rules apply. Nothing changes. Okay. All right, guys. I have a prior commitment that I have to run off to. If you have any further questions, please email me at support@daytradetowin.com. I do have the video of this recording. I'll put it up on my blog as well. Glad to see that some of you here are attending Monday's start of the new class. Classes start on Monday, August 29th, so glad to see a few of you have joined up. I still have room if you guys are interested. Email me if you have questions. You got it, Finley? It's DayTradeToWin blog, just a blog. DayTradeToWin blog. Okay, would be, show you here. You just go to the blog here, right here, right? Blog, and it takes you to the blog. Okay, that's the blog. Okay, that's the blog. Okay, so DayTradeToWin home, and then DayTradeToWin blog. Okay, Bob. All right, you're welcome. All right. These are all my videos. I thought that was kind of funny. If you guys saw that, this blog post. My main guy here, Chad, in the office, did that post there of Obama. I saw it like that. Alright guys, have a good day. I'll see if I can take a few more trades here before the day is up, and I'll talk to everyone soon. Thanks, Lou. Thanks, guys. Bye-bye now.